mergers. With the mergers in banks, which are going on increasing day by day. Earlier, some of the nationalist banks were merged with the existing nationalist bank, and now some of the private banks are also subject to kind of restructuring or merger. Just within 1.5 years, we have seen that three banks have failed. This first one is a PMC, a cooperative bank, then Yes Bank, and then now, and this is Lakshmi Vilas Bank, all in the private sectors. Of course, Lakshmi Vilas Bank was in trouble for some time now, and the total deposit of Lakshmi Vilas Bank is hardly around 20,000 crore, and the loans are totally around 14,000 crore, out of which 4,000 crore seems to be on a non-performing level, and the gross NPAs are 4,000 crores. That means the position of the bank is not so good, and the capital adequacy ratio is very less, and the owner's fund is coming slowly deteriorating. And if this is the case, the bank will collapse one day. Therefore, the RBI has taken a step to merge it with some other bank. The decision has been taken to merge it with DBS, which is a Singapore-based bank. I don't say that it is a bad decision, it's good also, because DBS is very sound, and DBS India Limited has been approved recently to take over the Lakshmi Vilas Bank, and even the court has given the green signal vacating the stay which was filed by some of the promoters. Earlier, Lakshmi Vilas Bank was planning to merge it with the India Bulls Housing Finance Limited, and then later on, one by one, they were trying like that. But a bank merging with the housing finance non-banking financial company is not a good proposition, and RBI has not improved it. Now, it is definitely good that RBI has improved, agreed to merge it with some other banks. That is a foreign bank, and of course, it is a good bank also. But my worry is that what will be the culture of the foreign bank which is acquiring it, and what is the culture of Lakshmi Vilas Bank. All along, Lakshmi Vilas Bank has been a south-based bank, and it's a small man's bank, and it was basically promoted by a business community, and therefore the small man's bank, how it is going to be comfortable with the foreign bank which is having the state-of-the-art technology and state-of-the-art working style and other things. Earlier also in India, several banks from foreign countries have tried to establish their own self, and we have already seen that some of the banks are miserably failed. Even though they are the very big names in the market, global market, they could not accustom or adapt themselves to the Indian working. Now that 533 or 40 branches which are there in Lakshmi Vilas Bank are going to be taken over, and DBS has no experience in Indian environment so far, and they have to adjust to the Indian clients. We have to wait and see whether this the foreign bank will be able to adjust itself with the Indian culture, work culture, and Indian customers' psyche. How they are going to manage is a very big $1 million question to see, wait and see. But definitely, I feel that Lakshmi Vilas Bank customers who have been very small customers so far, they will be trying to switch over to some other bank by and large. At least a major chunk may go. But the geographical presence in the form of 500 and plus branches will be remaining there, which will be a surplus, which will be a positive point for the DBS. And they can intrude into India, and they can establish themselves as a bank, DBS India Limited, which will be doing good work. Well, we have to wait and see whether the mergers are good or bad. Mergers are good if the synergy is going to be 1 plus 1 is equal to 11. If 1 plus 1 is just going to be 2, or even if the 1 plus 1 is going to be 1.5 only, then it is a disaster. Only the time has to tell whether the merger option which was taken by the government of India with the foreign bank is good or bad. Let's wait and see. Thank you.